Greetings and welcome back to another stock market live stream. Today we should probably start by talking about a little bit of a dilemma. It is a dilemma that I think Biden dramatically faces, and it's one that could be a big issue for all of us. And that is, if Joe Biden does not get a version of a progressive Build Back Better plan through, a lot of his campaign promises may never be realized. He has made a lot of promises about social spending, schools, paid leave, child tax credit, you name it, taxation, right? And his opportunity to get something done is really now, because once we get into 2022, his representatives and senators will end up being campaigning or end up in campaign mode for the 2022 election. Everything's sort of under a microscope in 2022. So it gets a little harder to get things done. So in my opinion, Joe Biden has this massive incentive to make sure that a deal gets done this year. If he has a massive incentive to get a deal done this year, then he's got to do everything in his power to make sure that things standing in the way of him getting a deal done are no longer in the way. And right now, one of the biggest things standing in his way are people like Joe Manchin, who are saying, we can't do a $1.75 trillion deal. Look at the inflation numbers. Look how bad inflation is. And so this is where multiple times yesterday you had Joe Biden say, I'm going to handle inflation. I'm going to turn inflation around. Well, that's great. What's the way to do that? You could wait 7 months for J-Pow to either be wrong or right and then adjust rates, in 7 months. Or potentially you appoint a hawk to the Fed or even fire J-Pow, something drastic, and you freak the crap out of the market because all of a sudden you've got this massive uncertainty done at the expense of the stock market for the benefit of Joe Biden. I don't know if he would actually do that, but in my opinion, there's a very real possibility that we could see some drama happening between the president and the Fed because it's really now weighing on Joe Biden's ability to get anything done. And that's not the sole reason, but that's kind of important to keep in mind for the stock market, because imagine if all of a sudden we get some form of, hey, J-Pow's fired, we're putting somebody else in. The market's going to freak for days until they can get comfortable and certain again. So I'd just be prepared for potential drama or madness. Best case scenario, he just says, hey, we're keeping J-Pow. Best case scenario. But anyway, that to me is a very real dilemma that creates very real risks for our stock market. It creates very real risks for the market in general because, well, you kick out the chairperson, there's gonna be a lot of drama. So be careful of that. And I know yesterday we talked about this as well, but I was just thinking about more about the political benefit to Biden of replacing the Fed. Huge political benefit. Think about it. AOC and some of the extreme progressives, Elizabeth Warren, they do not like Jerome Powell. They think Jerome Powell is a Republican and he's got to go because he's the reason we have bubbles and crashes. That's what progressives think. Like, again, Elizabeth Warren and AOC. So when you have that sort of pressure, and I don't know if Biden's going to cater to it, but he's certainly got some work to do. And the inflation report yesterday is not helping at all. Politically, Joe Biden, I think, has some big reasons to potentially pull the rug out from Powell. So I don't know. We'll see. In the meantime, let's go ahead and look at the market. Market is open today. I thought it was going to be closed. It's Veterans Day. It's actually a banking holiday. Not only is it a banking holiday, but it's also a day that, quite frankly, I would have highly assumed the market would be entirely closed because even the bond market's closed. But no, not the stock market. Veterans Day is celebrated amongst veterans, or Veterans Day is celebrated within the stock community by being open. Okay. So anyway, It's no problem. We'll go ahead and take a peek at some of the madness that we've got going on here. Take a look at this. PaySafe, I just noticed, just dropped 31.7% down to a low now of $4.90. This is pretty incredible. I mean, this is a company that was $20 not long ago. It really shows you there are some serious potential trap stocks that just take your money and they lose it long after, like months after months. And we've seen this with a lot of companies that have IPO'd. I mean, to some extent, C3 AI, QuantumScape to some extent, although recently it's been doing a little bit better. PaySafe, Hyliion, XL Fleet, Honest Company, Pinterest. There have been a lot of these sort of companies that just, market just does not care about. But anyway, PaySafe, unfortunately, now one of those. We'll find out why. I'll pull up Bloomberg and we'll see in just a moment. Beyond Meat down 16%. People are so done eating at home. Bumble down 16%. Owlet down 7%. Tattooed Chef down 6%. So these folks, by the way, they were supposed to report earnings yesterday. And just all of a sudden, out of nowhere, 5 minutes after the bell when they're supposed to report earnings, are like, just kidding, we're going to delay because we need some more time to put our financial statements together. It's like, really? You realize that 5 minutes after the market closed? That was weird. Obviously, now getting some sympathy selling because of Beyond Meat. Very common. Somebody's asking, when's Rivian dropping to $4? Well, Rivian should be here on the upside. So we've got, look at this. Affirm ran all the way up to $170 yesterday in the aftermarket. $176 in the aftermarket yesterday. Now it is rotating down a little bit here as there's looks like there's at least some profit taking while we go into the open here. But wow, up 22%. Where's Rivian? Here it is. Now Rivian's up 8.6%. Still think $110 or $100. Oh, what's it at? Yeah, $110. It's a pricey one. It's a pricey one for a lot of production hope. But okay, here it is. So PaySafe sinks on missed revenue. Oh wow, they were supposed to have revenue of $421.4 million. They came in at 355 to 365. That's on the guide. That's on guidance. And then Q3 rev came in at 353 versus 370 expected. Ouch. Darn. PaySafe stock drops 22% after guidance cut on digital wallet challenges. Digital wallet challenges. That's not good. Yeah. All right. So let's see here. All right. SoFi 16%. Lordstown Motors 14%. Root. Wow, some InsurTech is actually up 11.9%, and Honest is actually up 10%. Dutch Bros 8.72. Still can't believe that's like a $70. We've got thanks for the $20, Zachary. We've got look at InsurTech's actually moving today. Hippo is up 5% as Root is up, and then you also have, how's Lemonade doing? Lemonade's only up 0.7%. Tesla up 3% in the pre-market. Wow. Almost back to $1,100. What a swing in that particular company. It's incredible. All right. So then we've got, so Space, Virgin Galactic, 4.4 down. Disney down 6 to 163. That's such a great company. It shocks me. But anyway, that's I love Disney. And then they're brilliant too. That like charging now finally for fast passes at individual rides. Whew, so smart. People will pay now, not to wait. I mean, I think there's always have been people, but I feel like more now after COVID. Happy to report, by the way. Well, actually, I'm not going to say it. A different topic for a different video. DD Global up 4.69%, Canoe 3.7, Bill.com 4.2, Nvidia up 3.4, Tesla here's the 3, Neo up to almost 3 here. So it looks like a nice green market here overall. We do have obviously some with deep red, but a lot of these are ones that reported. And if they didn't report, they're barely down here, 1 to 2%. So reported companies or otherwise news. I don't know about Build-A-Bear. That's up 3%. But anyway, pretty green market today. Let's go ahead and look at the futures, which it's worth noting that we don't believe that Elon Musk has finished selling his Tesla shares, at least according to the disclosures that we have so far. It is possible, though, that more disclosures could come out, and he has until like 4 p.m. Eastern time today to point it out. But it's possible that he fully sold. We just don't know yet. We'll see. And I'm really hoping we get some news here, good news about JPOW from Joe Biden today or tomorrow. Market is buying the dip right now on some of the drama that we did have yesterday. Yesterday was pretty red. And the nice thing about that is it does give you buy the dip opportunities in some stocks. There are some, though, that in my opinion have run a lot that make them hard to add to, unless you've just got a lot of cash sitting around, which is a great problem to have. But anyway, Dow's up 0.05, S&P's up 0.35, NASDAQ up 0.78. And then, of course, we'll get the Russell when the market's actually open. Bond market is closed, but I believe we can get some pricing here. Yeah, look at that. So we can actually 5 p.m. It says here this is the yield as of 5:05 p.m. So I wonder if we skyrocketed last night. 5:05 yesterday. Yeah, maybe. But anyway, right now the yield here on CNBC is being reported at 1.57. It was so weird yesterday when the CPI data came out. It probably took 3 hours before the 10-year Treasury actually started running. And as the 10-year Treasury started running, Bitcoin started falling. It was quite an interesting connection. Now, yesterday was also a very red day for a lot of, and sometimes you see crypto trade with tech, but boy, that was quite interesting. Let's pull for a moment CoinMarketCap. We've got still down about $4,500 from its recent all-time high that lasted for 3 hours or something like that, and of $69,000 on Bitcoin, which is pretty incredible. Ethereum at 4687 right now, which is also pretty incredible, knocking on the door of 5K. And then you've got Solana up here. Solana having replaced Cardano. Cardano had a $69 billion market cap. All right, so let's see here. Let's go back to Weeb. So pre-market, you can see Build-A-Bear. What's up with Build-A-Bear in space? Let's see. Build-A-Bear Workshop. 6 days to earnings on Nvidia. Boy, I hope they miss gloriously. And they can create a buying opportunity, a short buying opportunity for everyone. Build-A-Bear. No particular news. Wait, is that true? Hold on a second here. Build-A-Bear. It's talking about an extremely high short interest. I want to pull it up. Let's find out. Ooh, SPAC IPO. Man, SPACs scare me. All right, hold on. Let's see here. Some are using crypto as cash to buy the dip. Oh, I agree with that. I absolutely agree with that. I think that's why sometimes you get that sort of sympathy fall of crypto, because there's a dip on Tesla or some other tech, and remember, people see crypto as a almost cash store, right? Non-government cash store. Okay, Build-A-Bear Workshop short interest is, that's weird. Okay. S3 Partners reports it at only 6.9%, but there was an art. I wonder if it was just an oopsie daisy. The short interest ratio in Build-A-Bear Workshop rose. Let's see here. Previous period averaging. Okay. Yeah, I don't have the most clear info on what's happening here with Build-A-Bear, but there's some reports that the short interest ratio is much higher than 6%. Some saying as high as like 90%, and I'm like, whoa, that's that would be very, very much cheered in social media. I feel like as an opportunity. Anyway, we'll keep an eye on that. So okay, PaySafe at 33%, 16% Bumble, 16% Beyond Meat. All right, let's see here. Posh, Toast. These guys aren't really doing anything right now. And the bigger movers are being Affirm, Open Door, SoFi. All three of these absolutely crushing earnings yesterday. Very incredible. Rivian at 110, very expensive. Lucid back up though, back to about $42. Nvidia 3 1/3, and Tesla 3 again. Really shows the impact of Elon selling, which we expect was mostly done on Tuesday. We shall see. Sold $5 billion already, yeah, but it's entirely possible that we're going to see more disclosures for Tuesday selling today, because you have a 2-day delay for when these forms could actually come out. All right, so let's see here. Next Tesla tag takes Rivian to $90 billion without sales. Yeah, it makes a lot of sense. Not really. Hedge fund let's see. Hedge fund Permabear Clark shuts down amid historic bull market. Yeah. Bond traders bet the Fed won't be troubled in long run. Yeah, I mean, really, with yields even going up just about 0.1%, it really is almost a bet by the bond market that we're not going to have that many issues. That's interesting. Let's see here. Yeah, bond market. Here we go. So this here says the bond market is still anchored on long-run Fed rates. Today is one of the odd holidays where the bond market and federal government are closed, but the equity market is open. Yes. In fairness, bond operators could probably do with a break after the recent volatility, but they don't get a complete respite. After all, the treasuries and Eurodollar futures are still trading. But yesterday's CPI figure ultimately just continued the trend that's been in place in recent months, pricing in Fed tightening and relatively near future. Yields are back. Ultimately, let's see here. There's one of the big reasons the Treasury curve hasn't moved higher in yield, probably at the back end. Let's see. Okay, let's see. Parabolic rise in even median CPI certainly suggests that something has changed, but until the market accepts the possibility that the long-term level of nominal rates is shifting higher, nominal yields may continue to remain low, enough to leave profit maximizing investors scratching their head. Yeah. Okay, that was a long piece that finally got to their argument. So their argument is the market's in a place where really it's assuming that no matter what happens with inflation here in the shorter term, yeah, we're going to go through these inflationary pressures. We're not worried in the long term. But I mean, that makes sense in like at the 10-year treasury market, even the 5-year treasury market. I do think a lot of people think most inflation is probably going to go away within the next 5 years. Although, you know what? Maybe I shouldn't make that assumption. Maybe I should just poll y'all. So let's do a little poll. Let's see here. Let's see here. Do you believe inflation will be under 2% consistently by 2025? Yes. Oh. Okay. I asked it in the chat. You don't have to be a member to vote. I don't think, at least. But yeah, let me know what you think. Huh. All right. So Matterport coming back about 2.6%. Cool. Let's take a look at some headlines to see what's going on. All right. Some other ones. Let's try Barron's. Polls frighten you nowadays? Dividend stocks and buybacks are headed higher. Here's why. How inflation is threatening Biden spending. See, oh, look at that. Yeah, this is. Inflation is entire. This is what we started this video on. Inflation is absolutely burning Joe Biden's plans. Today's report shows an increase over last month on inflation. Reversing the trend is a top priority. Yeah, Biden's trying to provide some confidence. Economists say reconciliation doesn't look too promising. By all accounts, the threat posed by record inflation to the American people is not transitory and is instead getting worse, Manchin tweeted. From the grocery store to the gas pump, Americans know the inflation tax is real, and D.C. can no longer ignore the economic pain Americans feel every day. Yep. Separate report this week from the New York Fed said the median one-year inflation expectations jumped to 0.4% in October to a series high of 5.7%. Wow. Yeah, and this is one of those things, by the way, that creates that potential for a spiral in inflation, because as individuals expect inflation to continue, they hurry to buy, and by hurrying to buy, they create more demand in the short term, which actually drives prices up as you compress demand into a shorter period of time. All right, so shrinkflation. Yeah, no kidding. So let's see. PTSD when he said bull. Let me see what folks say. Let's see here. So, yeah, this is kind of what I was expecting. So let me see how many of y'all have voted. Yeah, okay. Okay, it's fair. It's much more. It's pretty much like, I mean, it's definitely leaning to one side. But let me say, vote, and then you could see the answer. Only 2,000 of you have voted so far, so please vote. But it's pretty close to 50-50, and I wonder if it's going to swing if more people vote. But that's the thing. You're in either camp transitory or you're in camp, continued inflation. We'll see. Camp transitory. Camp transitory is in session a lot longer than we expected. All right. Wow. NVIDIA gets a 49% price target boost before earnings. Why analysts are so bullish? Oh, dear. Analysts are bullish on NVIDIA heading into company earnings next week with demand from data centers, AI, and a boost to gaming. NVIDIA is up 3% in pre-market. Shares have risen around 120% last year. Let's see here. The company began recently pushing past Warren Buffett's valuation as the 7th most valuable company by market cap. Oh my gosh, that's insane. Based in Santa Clara, California, NVIDIA is primarily a maker of graphics processing units. NVIDIA is set to report earnings next Wednesday. There are reasons to be bullish, says Oppenheim and Susquehanna. Analysts led by Rick over at Oppenheim reiterated their outperform rating on the stock and raised their price target by 49% to $350 from $235. Oh, well, it is about $300 right now. I see. Okay. So 49% for their price target. Okay. Nice clickbait. Got me. Yeah. NVIDIA's manufacturing strategy involving both Taiwan Semiconductors and Samsung serves as a distinct advantage in the time of industry-wide pinch, an industry-wide pinch on inflation. All right. So it's going to be very interesting to see how we open here. If there's going to be any profit taking. Sometimes the day after you have a red day, And then futures are green. People try to take profits like right at the beginning because they got freaked out a little bit by the day before. Like, oh my gosh, I should get out, more. What am I trying to say? I should, yeah, whatever. Lost my train of thought entirely. Thanks, Bloomberg, for the notification here. I should stop staring at Bloomberg notifications. But anyway, oh, yeah, of course. Oftentimes, the day after a red day, people take profits as they're trying to get out of margin. And right at the open, you see some of the red lines and a nice sort of follow-up day dip on green futures. But then the hope is, obviously, that green comes back. So we'll see. Bullish on the long run, sort of end-of-the-year rally here. Well, by long run, I mean next couple months. But nervous about Biden in the meantime. I think Biden could, Biden is playing chess right now on the J-Pow decision. So we shall see. All right, let's get ready for the bell. Let's see what Kramer's got to say here.
They were talking about this morning on Brian Sullivan's excellent show. No markdowns. Markdowns were a theme of so many. David, how many years did we come in and say, oh, they had good sales, but they bought them?
Well, because markdowns, high inventories lead to markdowns. You know what no retailer has right now? Any inventory at all.
Thank you, Mickey Drexler, for teaching us everything we needed to know.
So, yeah, I mean, part of the problem is some retailers don't have enough inventory to sell.
I just get so excited. I just want to be the person who's like, now cheer.
They didn't have the truck hadn't come in, is what they told me. I said, where's all the stuff? It reminded me of what a Russian drugstore must have looked like under Brezhnev. Remember Brezhnev? The hero of
Okay, that's like a 50-50 market. Interesting. So let's take a look at how some things are starting off here. So let's see here. See, look at that. Look at that affirmed profit take. Like the second you open, you get that affirmed profit take. Look at that. The second you open, oh, that's affirmed as well. You got it on Open Door as well. Ride is actually going up a little bit on SoFi here. Rivian's going up. Rivian and Ride doing well here. There's that big red line on Root. Those are execute at all cost orders right there. Jeez. Proterra. EV goes up again. Canadian Solar. DQ's going up. Not to be confused with Dairy Queen. You've got EXPI. Nice 4% move here. Let's see. How did Tesla open? Yeah, look at that. The Tesla red bars just shaved off a nice percent instantly. Maybe Elon's got some more selling to do. We'll see. See how the volume goes. PaySafe. Looks like green volume here. It's difficult to tell, though. It's still at 4.9. Ouch. Bumble and Beyond Meat seem like they're actually recovering a little bit. Some buy the dipping happening here. With the exception of Tattooed Chef. Tattooed Chef actually selling off more after delaying those earnings. Yeah, delaying earnings is not good. Affirm still rotating red here. Looks like Affirm and SoFi are catching up with each other. Affirm's coming down, SoFi's trying to go up. There comes a little bit of that profit bubble again. The profit take. So stocks open higher coming off worst session in a month. Ooh. Let's look at how the indices are doing. Yeah, all green. Dow up 0.06%. S&P futures a third. Well, I mean, we're past futures now. There we go. It's still showing as futures, but anyway, it's not. NASDAQ up 0.72. All right. Yeah, NEO deserves a run. NEO's been stuck. So stuck at $40. Break down HUT earnings. We can look at HUT 8. Let's see. HUT 8. All right. HUT 8. Let's see here. Third quarter EPS comes in at Canadian 15 cents, revenue 50.3 million Canadian, and digital assets worth 263.8 million as of September 30th. Yeah, nice. Hut 8 mining up near 10% in U.S. pre-market as it turns to profit versus a year ago. Wow. Good for them. Hut. Jeez, $15. That's incredible. This has just been such a runner of a stock. Really, really good. I mean, one of the best performers. The crypto miners since the summer crypto crush. Wow, they've just done so well since then. All right, let's see. What's Jim complaining about today?
Company to Amazon if you were going to get the deal. And David, I think you noticed that they gave warrants that were a significant amount of a firm was given to Amazon. Now you have to start saying, well, is this going to be like another one of these deals like Plug Power? Remember, Plug Power ended up giving a lot of the stock to Amazon?
Well, I mean, Amazon's doing quite well in their venture investing, if you want to call it that, or their equity. I mean, between Rivian and Affirm alone, they've got many billions of dollars. Now, for Amazon, it's still kind of change they found in the couch, but for any other company.
Billions of dollars change in the couch. Oh, my gosh. All right, what else here? Let's see here. So, all right, what do we got on headlines here? No, there was a little bit of Evergrande drama yesterday. It does look like they ended up paying their bonds yesterday. There were articles side by side yesterday showing both ways. But look at this. Regarding Evergrande, we have signs of easing as delayed bond coupons were paid. Evergrande update. So it's worth noting that the way this Evergrande crisis was started, to some degree, beyond, of course, excess leverage, was companies actually purposefully taking excess leverage because China was encouraging them to. China wanted so many properties built. China wanted so much real estate development because it contributed to the economy so much. And China has this growth at all expense, goal with their economy. And last August, they came out with this 3 red line policy. Number 1, liability to asset ratios need to be less than 70%, net gearing ratio of less than 100%, and cash to short-term debt ratio of more than 1. And anytime you miss one of those 3, you end up losing the amount of debt you're able to grow at the company, like how much you're able to grow your debt by. I'll show you a little chart here. This is a chart from UBS, and I think they did a good job. Okay, here it is. And what it really shows is if you mess up one of the 3 things and you end up hitting their red line policy, your ability to grow debt wanes substantially. I mean, you go from being able to go from, let's say, $100 million in debt to $115 million in debt to if you've got 3 lines that are hit, you're not allowed to grow your debt at all. And unfortunately, a lot of Chinese real estate developers are reliant on being able to get more debt to not only grow, but to pay their past obligations, which certainly raises the questions of, and for a debt bubble. But beyond that, what you see right now with Evergrande is somewhat disastrous. And so there's been a lot of attention on China. Okay, is China actually going to do anything? Are they going to let Evergrande just default and collapse? And that speculation has somewhat heated up in the last few days. However, now, take a look at this. Investor speculation, and it's always good to point out speculation, that China will take steps to ease the cash crunch for embattled developers drove property stocks and bond stocks higher. And so really what you have is customers and individuals in China, whether they're hearing it through the grapevine or what, institutions over in China are betting that China is actually getting ready to, or has already started to, basically here, look at this. Chinese state media stokes speculation, property crackdown may ease, right? That is a horrible title. And it's just so poorly written. But anyway, all it would take is China to say something like, hey, you know what? We're going to shelve the 3 red line policy right now. and will enable you to borrow more. Well, if Evergrande could turn around and borrow more money, out of the accord of the 3 red line policy, then they'll be able to make their payments. You'll really be able to avert a crisis at Evergrande. You'll do so for the time being. It'll come back at some point. At some point, the debt bubbles always come back. But that could be a way to solve a lot of the Evergrande fear. And you then remove another fear from the market. And remember, we really need fear in the market to actually see decent pricing. We have very, very little fear of that right now. The biggest thing right now, the biggest fear catalyst is J-Powell getting renominated or not. That's the biggest fear catalyst right now. But Evergrande is, I would say, up there as well. And so this, at least the speculation seems potentially positive for markets. Okay, so going back to the sticks here, looks like Affirm's only up about 15%. So it's, it was up 27% in the pre-market and post-market. So it's not as enthusiastic here on the market as it was off the market. Well, I mean, pre-market and post-market yesterday. But obviously still a good day, 14, 15%. Root, Open Door, Lordstown, SoFi, Dutch Bros up 10% again. It's incredible. That one has so much enthusiasm for it. Cloudflare, look at that, up another 2.77% to sitting at 200 right now. That thing was at $130 6 weeks ago. That's nuts. And Tesla is only up 0.9% now from being up 3%. Yeah, it also seems to be trending. It's bouncing. Okay, never mind. All right. How about crypto? Paysafe selling off more, now 36%. Was down 31%. Yeah, Tattoo Chef came back up from that 8% decline there for a moment. How is crypto? Let's see what other headlines we have as well. Do you think Elon's selling? Maybe. You never know. Bitcoin sitting at 65,000, so slight bump here. And MQ moving with Affirm. Yeah, I could see that. Sort of the fintech sectors. But you did also have MQ report yesterday, and they beat nicely. All right. So what else? What do you got?
Disaster. I mean, there wasn't anything. I mean, maybe some people just say it's over.
That's going to take you back to May of last year.
It's before they started caramelizing it. What?
Paysafe just halted. It's too volatile here and not enough liquidity probably. So see if you sold a put on it. It's so risky. But say you sold a put for $4. I wonder what you'd get. I'm surprised. Not as much for 30 days here as I would have expected. Have to go up to J. Yeah, I would have expected a little bit higher. Maybe the volatility hasn't really hit pricing yet. Let's see here. Paysafe, historic volatility. Yeah, it hasn't actually really gone up yet. Maybe that's why the pricing hasn't moved much yet. Okay, so I'd probably wait on options if I were going to sell an option. If you're going to buy an option, volatility still probably, I mean, it's slightly elevated. It's a little bit above its 30-day. Okay. Is Lemonade? Let's see, Lemonade here. Lemonade's up about 3.3%. Disney is, wow, Disney's down 9%. Look at that sell-off. Ouch, Disney. That's a lot. And that's a big move for Disney. Tesla back up to about 1.4%. Does make you wonder if this is some more Elon selling, right? Spread it out over the week. No. All right. Then we've got, let's see. Bloom. Kathy Wood calls Tesla's rough week a blip on the way to 3,000. Kathy. Let's see. Inflation shock tears up trader playbooks from stocks to Bitcoin. China state media. Okay, we talked about this already. No, missing not a lot of news this morning. Market recovering from yesterday's drama. Still waiting to see what Biden does on on inflation. Fed's inflation miscalculations are hurting the poor. Headline here in Financial Times. All right. How about Wall Street? How are sold puts on Diz? Yeah, I mean, volatility is still really low. Maybe they're good, but we'll look in just a sec. We'll look right now. Oh, there goes Tesla again. It's interesting. It's so weird to make you think, is Elon right now, all right, watching the sticks, he's like, all right, I'm gonna do it. Swipe, and then just boop. I mean, I would do that if I was selling billions of dollars of a company. Kind of cool to see. So let's look at Disney options. So you got 36 days, $6. Yeah, 585. 3.6% in 30 days. I mean, nothing special. 36 days. Go out another 30 days. You're at 770. Better, but still like 5%. All right. He has a CEO or CFO, Chief Financial Officer. Yeah, I'm sure he does. Doesn't mean he can't swipe up himself. Yeah, I don't see any major volume spikes. You're right, but maybe people are out of money to buy the dip. This is also true. Elon has to trickle the sales. Absolutely. Yeah, just picture Elon on Robinhood. That's what you need. If you're an investor in Robinhood, what you need is Elon to say he sold all of his billions of dollars of Tesla on Robinhood. Could you imagine how the stock would react if Elon said that? Oh yeah, I had all my options sent over to me in my Robinhood account, and I swiped up and sold them. Robinhood gave me a notification. Sorry, sir, we can only do $1 billion at a time. Oh my gosh. That'd be so funny. Anyway, a stock that's been in a toilet would be all of a sudden doing a whole lot better. The Robinhood toilet. All right, let's see here. Pretty consistent so far, except I'm pretty sure Canadian Solar came out of nowhere here. Now with an 11% gain. I'll see if there was news. Okay. You see why Elon was pissed off because Hertz was pumping the stock right before he invested, or he had his options vest. Yeah, that's a good point. Canadian Solar. U.S. won't open trade probe into Asian manufacturers. Okay. I don't know what that has to do with Canadian Solar, but okay. I guess competition-wise, could have slowed the competition down. All right. Wall Street Journal. Binance became the biggest crypto exchange without licenses or a headquarters, and that's coming to an end. But good for them. That's actually amazing. All right. Wow. Root, Open Door Forum, Lordstown, SoFi, 23andMe, Canadian Solar, Honest, Rivian, Wish, Sheeb, all of these almost up 10%. And yeah, Lemonade's up 4% as well today. It ran so well when they announced that car insurance. It ran to like $78, but it was briefly there. Very brief. When are we going in on Beyond? I don't know. That's a good question. Is when is their valuation a little bit more unridiculous? Yeah, look at Tesla just bleed down. Let's look at Beyond's growth. I think their growth keeps getting revised down. Let's see. Financial analysis on Beyond. So Beyond is so I have 19% here in 2021. Some reason in 2022, analysts expect about a 40% growth, but then 20% and 24% thereafter. I mean, that's still a nice growth clip. But then again, PayPal has a similar story, and they're just getting wrecked. And they're flat right now at 204. I mean, they've been drug along the bottom. Look at the day chart here. Look at that on PayPal. I mean, that's insane where you can buy PayPal right now. And then Beyond. Let's look at Beyond. So that's PayPal. Yeah, and Beyond has really just fallen out of its previous basket, well, sort of trend basket. $50, $78. Did fall in March, of 2020 to $39. That was March of 2020, though. The low right before it, at a low, it was somewhere around $75 at Beyond Meat in 2019. But that's when you still had hope ahead of you, not behind you. Let's see. Is GM running? Is that true? Well, a couple percent. Oh yeah, look at that. The chart looks nice, but also risky. Tesla. Yeah, a lot of it's quite possible Elon's selling again. More. Let's hope for some big sales to come through. That might really push us down. If it falls a nice chunk, I'm down to buy. But it's got to be. Honestly, I'd love to see something with an 8 in the front. That would be so amazing again. 7, 8. That's where I capped out last time. Okay. Otherwise, does seem like the market is recovering after yesterday's drama. I wonder how long it'll last, though, with JPOW as an uncertainty. So SPY's only up about a quarter. Pull up SPY here. Yeah, S&P 500 sold off right at open and is rebounding up right now. And the Dow has also dropped off a little bit. All right. So, ciao from Italy. Hello and goodbye. Yeah. Oh, that's awesome. So, all right. Well, now we're on standby for Biden. And, it's a little harder to find good deals right now. They're out there, but they take a little more effort to find. So I'm going to go hunting. We'll do the course member live stream here soon. Maybe in 30 minutes, 30, 40 minutes. And we'll see y'all in the next one. If you have not yet checked out on the StockDoc coupon code, check that out down below. Remember, it's Black Friday month. It's and the price doesn't get less expensive. Like if you buy today, there's no way the price will be lower in the future. If anything, the net price would be a little higher. So check that program out down below. Use that coupon code StockDoc. And folks, we'll see you in the next one. Thanks so much. Bye.